It's an absolute pleasure today to dive into how we're going to make this work for you. Let's dive right into it. We'll keep it brief. These are the points that we're going to cover today. We're going to cover off sections. So again, be sure to leave your questions in the Q&A box and we'll get right back to them at the end of the webinar. Perfect. So let's start with the first question. What is a mortgage? Now, most of you know what a mortgage is, but let's put it like this. This is your opportunity to own an asset which will help you grow your financial future. So you're borrowing money from a bank to be able to afford this. And that's exactly what a mortgage is. So let's go to the basics and we're just going to start to look at why you should get a mortgage. Now, depending on your appetite for debt, mortgage can be used and leveraged as a tool which can really help you secure your home ownership, which gives you stable housing costs in a very unpredictable market. And it gives you investment opportunities to help you expand your portfolio. All of this information is listed here, and we will send you this copy to the guide at the end of the call as well. Super. So let's look at what we can actually bring to the table. Abhishek, would you like to take a moment to explain the types of mortgages that our clients can take advantage of?
Yes, Kiki, thank you. So basically, we are trying to explain to you what are the different options that you can get in the market. Okay. So in mortgages, you have a couple of options. It's called fixed rate mortgage, variable rate mortgages, offset mortgage, and rental income only mortgages. They sound a bit confusing, but to put in clear words, fixed rate mortgages are those mortgages where you can predict your monthly payments to a certain tenure. For example, some banks can offer a fixed mortgage for 1 year, some offer for 3 years, some even offer for 7 years. So depending upon the market situation, you speak to the experts, which are the mortgage brokers like us. You speak with us, try to understand what is my best option to go forward with the mortgage application. Same goes with variable rate mortgages. Let's say, if you remember a couple of years back, the bank's EBOR rate, which is governing the actual interest rates for mortgages, was very less. At that point of time, people were taking the benefit of starting with the variable rate from day one. So whenever the market rates are better, you speak with us, we can recommend you which option to go for. So whenever you start your mortgage application, you will have two options: either take a fixed rate mortgage or you go for a variable rate mortgage. And the next point is offset mortgage. This is something which many people do not know or are not aware of the offering given by the bank side. So in layman term, what it means is that this mortgage is linked to your savings account. Whatever money that you keep in your account offsets the interest that you pay on the mortgage. To give you an example, let's say you take a mortgage for 1,000,000 dirhams, okay? And for the entire first month, you have around 800,000 dirhams kept in your account as a savings money. So in this situation, what this offset mortgage does is only the balance 200,000 dirhams, which is not kept, they will charge you interest for that. Let's say the following month, you keep the entire outstanding amount in your account. In that situation, bank will charge you zero interest. So this option is very good for people who like to keep liquid funds in their account and they do not want to maybe take variable or fixed rate option, but they want to take the option of offset, and they can try to reduce your interest rate based on the options that you select. And the last one is rental income only mortgages. This is ideal for investors who do not have any fixed salary. So let's say I'm a client, I have 10, 15 units which are put on rent, and my only source of income is from rent. So for such customers, we recommend rental income only mortgages, which we don't have to show them any salary or any other business proof. Kiki, can you explain who can qualify for mortgages?
Of course. Thank you so much for covering those points. And I can see you guys are leaving in some questions as well. So we will be sure to get back to those. Now, like you asked, Abhishek, what clients can qualify for mortgages? So we get this quite often. We have many caveats. You can be a UAE resident, you could be a UAE national, you can be a non-resident. These are the type of people that are eligible for mortgages. The minimum age is 21 years old here in the UAE. So again, 21 years old. The salary needs to be a minimum of 10,000 dirhams per month. That's your basic salary, not including commission or overtime. Okay. Your credit score. When you want to check your credit score, you can check on Google your ADCB credit report, AECB credit report. This can be found, you can Etihad Bureau report, you can Google it, type in Google for your credit report and you'll find it. But the minimum score for a mortgage in the UAE is around 700 if you want to get the best interest rates. Okay. And again, you can get all of this information by speaking to your mortgage broker as well. So once we figured out who can get it, who can get the mortgage, let's look at the 11 steps. Now, there are 11 steps to taking a mortgage, but I want to focus on the main one. That is speaking to a mortgage advisor. As you can see, this process is very lengthy, and if you've not experienced it before, it may be very overwhelming. So here at Pripco, we like to take the headache out of this journey for you and help you focus on the main points. The first point being is getting your pre-approval. We want to assess your profile in its full entirety to make sure you are eligible to go out there and shop on the UAE property market. So checking your eligibility is key. And we can also start to look at giving you your pre-approval within up to 48 hours. 48 hours in the UAE mortgage market is insane. Do you remember when it used to take us 2 weeks to get pre-approvals, Abhishek? Okay, 48. 48 hours is a breakthrough. And we'll give you the best offers from across 18 different banks in the UAE, all offering mortgages. So instead of you going to all 18 banks, you come to us and we will narrow it down to the best bank that suits your profile. Okay. Now, not only will we give you the best options, but we will take you through the process from start to finish. So don't be overwhelmed by the 11 steps. You will have a dedicated advisor to help you every single step of the way. Now, while we're on the subject of qualification, let's talk about documentation. When you're applying for a mortgage, it's pretty straightforward what you need to provide. As a salaried individual, you will need to provide your payslips, bank statements, salary certificate addressed to the bank. We'll also need the standard core documents, which are going to be your passport, the front and back of your Emirates ID, your visa, and a proof of address, along with your last 6 months bank statements. Pretty simple, pretty straightforward, but this will give us a clear understanding of your profile. If you are a self-employed individual, there is extensive lists which we will send to you after the call, okay? Fantastic. So Abhishek, would you like to share with us how working the numbers in the real estate and the mortgage industry can help clients understand their position?
So basically, we have a couple of fees which are included during the mortgage journey, which some people understand and some people they find out in the very end. We at Pripco, we ensure that we inform the customer from day one the total cost that will be involved in the entire journey. This slide will give you a glimpse of the basic charges which will be involved. So let's start with the real estate brokerage fees. Whenever you sign an MOU, you can always see that there's a certain percentage up to 2% which is charged by the real estate broker. And there is something called as conveyancing fees. These are charged in case you are looking for some assistance with the entire process for documentation and transfer. So it's a added charges which is charged by the real estate agents, where you can expect something around between 6 to 10,000 dirhams. Talking about the government fees, whenever a client takes a mortgage, there is something called as mortgage registration fee, which is around 0.25 percentage of the loan amount. And plus there is 250 dirhams, and you pay 4,200 dirhams to the real estate trustee office. Whenever you're doing the transfer happens in a real estate trustee office. There you pay 4,200 dirhams if the property value is more than 500,000 dirhams, and you pay around 2,000 dirhams plus VAT if the property value is below 500,000 dirhams. And apart from this, whenever depending upon the bank that you select, banks can charge you a processing fee for up to 1%, depending on the option that you select. Again, whenever you work with us, we do explain this to the customers. Whenever we provide you the options, we give you options A, B, C, or A, B, C, D. We explain to you terms and conditions for each and every bank. And then, subject to the bank that you selected, you can have a maximum processing fee of 1%, which is charged from the bank side. There is something called as property valuation fee, which is paid to an external valuation company. What they do is that they are the one who submits a valuation of the valuation report of your property. Based on the report, bank derives what is the maximum amount they can fund you. This is a very crucial and important step, and this based on this, your loan amount is determined. And the most important part is the service fee that we charge. It's very expensive. We charge 0 dirhams for the entire service. And we try to ensure that we handhold and explain to you each and every step. And the most important thing for us is that you make a informed decision. Anyone can recommend you a bank, anyone can give you the basic number calculation, but the entire journey and the entire experience of selecting the right mortgage is very important. That's where we come in place. And especially that's where
Perfect.
Kiki.
That's where I come in. Thank you so much, Abhishek, for explaining that, and I hope that was clear for you. Okay, so this is Abhishek's niche part
So
here.
I wouldn't say
Go for
niche.
it.
I would say this is something which is missed out by many of the clients because they keep trying to look for funds to buy the property, or if they know that I can take a mortgage, they always have this thing that okay, I need to have 20% down payment or 40% down payment, because since I do not have that, that's why I'm not purchasing additional properties. So this particular slide is for those clients who already own a property. It can be with mortgage or without mortgage. So talking about the first option, refinancing. So refinancing can be done for clients. Let's say, for example, looking at the current property market prices, you know that if you own a property which was purchased few years back, definitely the value has gone up. So let's take an example. You bought a property in 2020, which was valued at 1 million. Let's say that now the current value of the property is 1.5 million, and this property is fully paid. So how can I use this property to purchase an additional asset? It can be an off-plan unit or it can be a ready unit. So in this situation, what we can do is that if you own a house which is fully paid in cash, reach out to us. We can give you an estimate how much maximum amount that you can take out from this unit. And that funds you can use to purchase an additional property. It can be an off-plan unit and it can be a ready, fully paid unit. Talking about equity buyout, this option is for the clients who bought the property with the help of mortgage. So I'm talking to people who have taken mortgage in the year 2019, 2020. They had taken fixed mortgage for 3 years. Some people took variable rate mortgage from day one. These clients, if you look at your current interest rate in your mortgage application, you will see that your rates have gone slightly up. Apart from that, the property value also has gone up. So here, what we can do is that we can help you to structure your mortgage, where we can move your mortgage from one bank to a different bank, which can give you a competitive rate. Apart from that, in case you have planned to expand your portfolio, or let's say if you have any other property which is under payment plan and you need some extra funds to pay towards that, we can transfer your mortgage to a different bank and give you the equity for the remaining amount which is left out. So that's why if you own a property or if you own a property with the mortgage, reach out to us if you're looking for some additional funds.
Thank you so much, Abhishek. That was very clear. I can see you guys are popping up with the questions. Like I said, we'll be sure to answer those at the end of this webinar. Okay. So let's look at some key points here and how Pripco can again provide you with all the value that you need. So Abhishek mentioned this earlier on, but I want to reiterate it. There is no fee for our services. Our experience and expertise that we deliver to you is completely free of charge. There's no hidden charges, and we won't be asking you for a dirham or a dime at the end of our service, okay? You will get full end-to-end support. by our dedicated advisors. You will be able to contact them as and when you need to get updates. And please don't ever feel like there's a question that can't be asked. There's no such thing as a silly question. Not only that, we will ensure that you are kept up to date, you are in the loop, and full transparency is in front of you. Because the last thing that we want is for you to feel like you're the last person to get the info and you're left in the dark. Okay. We're offering bank rates of around 18 different banks. So not one size fits all, but we're guaranteed to find a solution. And trust me, we will do our best with all the knowledge and expertise that we have to help you find the right lender. And guess what? We've got access to the best rates in town. We know a thing or two, trust me. Now, talking about being in town, what happens if you live out of town? What happens if you are a non-resident looking to buy in the UAE? So on our next slide, we should be able to see some information about off-plan for non-residents. There we go.
Actually, before we move to the next slide, I would want to discuss some of the exceptional cases that we did. And when we spoke with some of the real estate agents, some of the clients, we got to know that not many people is aware of it. So Kiki, can you explain to us the recent case that you did where one of the GCC national or was looking for some funds to buy a property in Dubai, and he had a couple of units in UK?
Of course, I think you've just explained it for me, but I'll elaborate on that one, of course. So look, I have a large network of people that come to me with questions. And while I was brainstorming with one of my clients, he said to me, Kiki, I've got properties in the UK and I just can't seem to figure out what to do. So I'm going to sell them. And I said to him, we have a new product which might work for you. And it really did work, and it worked wonders. We was able to use his profile as a UAE resident, his income, his position, and we was able to leverage releasing equity and refinancing his UK property. That's right, the properties he has in the UK. We was able to release equity from here, from Dubai. We was able to get that money out of the property. We even put it in an account where there's no transfer fee to move the money from the UK to the UAE. And he was then able to reinvest that money back into the real estate market. A real game-changing product, especially if you have set up shop here, you live here, you work here, and you have your properties in the UK. This product is absolutely amazing, and I can't recommend it enough, even just to get a review if you do have properties in the UK and live and work here.
Thank you.
So, while we're talking about exceptional cases, Abhishek, you had a case not too long ago with a business owner looking to leverage some equity. Can you tell us a little bit more about that one?
Oh, yeah. So this is also some of the questions that we receive. If you have ever tried to apply for a mortgage or try to discuss with any of the banker, whenever you request for equity release, the first question they are going to ask is, what are you going to do with the funds? So nowadays, banks have made it a bit strict. They want to know what is the end use for the property, for the funds that you take out from the property. That means you cannot take the money in your account. You cannot use it to purchase a car or invest in stocks or anything else. They want to know where you're going to use it. And they typically allow only to purchase additional unit, or if you have any other property which is under payment plan, you can pay towards that. Um, Recently, whenever we get such kind of inquiries from a self-employed customer, person who has a business here, many people do not know that if you have a business and you have another property, you can use funds from the property to expand your business. So in this, what happens is that here bank will not ask for any other new property documents. What they will do is that there's a specific product just for clients who are looking for funds to expand their business. What they do is that they make you sign a declaration form. In that you mention, I'm going to use these funds to expand my business, and then they let you have these funds.
Doesn't sound like a bad deal at all. Absolutely amazing. So guys, listen, we've covered off some of the key points today, and I know there's been a lot of information that we've shared, but let's take it over to the Q&A section now. We're going to take a moment to answer some of your questions, and then we'll tell you how we can follow up from there. So, Abhishek, we've got quite a lot of questions. They
Yes.
are definitely tuned in with us today. So, thank you so much. So,
Hello.
we're going to start with the first question. So, from an anonymous attendee, please elaborate on the off-plan mortgage for properties under construction, mainly off-plan for residents and non-residents. Abhishek, I know you know, I can hear you jumping at the bit to tell us the answer to this question. Feel free.
Yes. So basically, off-plan mortgages, we can look at two different ways. One is off-plan for the client who owns the property. They want some funds to clear off the remaining payment. And the second bit is for off-plan resale. Let's assume that I have to buy a property which is under construction from a seller. In that situation, this will fall under off-plan resale. So let's split this question into two. First one, off plan for the payment under the payment plan. In this, what happens is that banks will finance for select developers up to 50% of the property sale and purchase agreement value. Sale and purchase agreement, short form is SPA. I'm sure people who have off-plan properties, they know what is SPA. So anyone who has off-plan property, bank will finance you up to 50%. But what I would suggest is that before you can make any decision that you're going to buy a property and then later you'll get the mortgage, you should speak to a mortgage advisor to understand which property and which developers can be financed. This is the off-plan unit. And second is off-plan resale. Off-plan resale is for the clients who want to buy a property from a seller which is still under construction. In this situation, recently we have a very good product where banks will finance you 50% of the MOU value. MOU value is a value which is typically signed between buyer and seller, where they agree to a specific price and bank will finance 50% of that or the valuation amount, whichever is lower. Why this is very good is because until few months back, every bank who were financing off-plan units, they were giving 50% only for the SPA value, which means, let's say I purchased a property in 2020, let's say for 1 million dirhams. I'm a seller. I'm going to sell this property right now, which is 50%, 60% completed. I want to sell it for 1.5 million dirhams. As per the previous rules and regulations, bank will finance 50% of only 1 million dirhams. But right now, we have a very unique product where what the bank will do is that they can consider 1.5 million dirhams, which is the MOU value. Here, they will do a bank evaluation, and here, whichever is lower, if the bank valuation comes to 1.6 million and the MOU value is 1.5 million, they will finance you 50% of the MOU value. I hope this question is answered.
That was a very, very good answer. Thank you so much, Abhishek. So let's have a look here. I can see a question here from Mr.
Yes.
Kalitus. I can see
Kiki, I guess you should answer this one. I have been advised that companies cannot get mortgage in Dubai. Is it true? And if so, how can companies buy properties?
so this falls under one of our exception questions. It is possible, providing you have the right documentation, we can present your profile to the banks and look at the financing options. We may be capped at loan to value, i.e. maximum 60%, but providing you have the right documentation for your company, we can consider looking into some options on your behalf. We'll be sure to reach out to you at the end of the webinar where we can answer your questions in further detail. Perfect. Abhishek, here we've got a question from a landlord. He says he has two fully paid units and he holds his residency here, but he doesn't live in the UAE. Can he get equity out of his property?
Yes. So this goes back to the same discussion that we had. Even non-resident customers, they can apply for mortgage. So here, what we do is that we request for an income proof. It can be salary certificate copy or a business license proof, which shows that this is a source of income for the particular client. And apart from this, we will require 3 months bank statement, which is under the client's name itself. Here in the bank statement, what we are going to check is if you are maintaining up to 25,000 dirhams worth of money as an average balance every month. If you maintain 25,000 dirhams per month in your account, you are kind of pre-qualified to take a mortgage in UAE. And once you're pre-approved, what we do is that we will request for the title deed copy for the property. And based on the property value, bank can finance up to 60% to take equity. I hope this answers your question.
I hope so too. Very good answer there, and very good questions as
Oh,
well,
I see another question from anonymous attendee. The way Kiki speaks gives me confidence. I'll be in touch soon. Pripco seems like the best MA firm to go with. Yeah, that's
You're
true.
not wrong. Thank you so much, Mr. Anonymous Attendee. I appreciate you. Okay, so we can't give out Abhishek's number, but we can put you in touch with the relevant team to give you all the support that you need.
What we would suggest is that you can reach out to 800 Pripco and we will take in your inquiries and the right team member will reach out to you to explain and guide you through the entire mortgage journey.
Perfect, perfect. Okay, so Katrina, we see you. Hello, thank you so much for joining us. Let's look at what Abdul has asked. So basically in the UK, it's about £2,000 I need to earn before commission to qualify for a mortgage in terms of income. Correct. Usually we like to see the equivalent of this amount on the pay slips and bank statements to work with international clients who are salaried. We'll ask you for a whole list of documents, so your pay slips, your bank statements, a copy of your contract. But yes, it's fully doable and you'll be eligible for up to 60% of the loan, the value of the property as a loan from the bank. Perfect. Lovely. There we go. So we have another question here, Abhishek. We're running out of time, guys. We'll get to as many questions as we can. Yes.
This is for you. If we move mortgage from one bank to another bank, do we have to pay all the processing fee at once?
Okay, very good question indeed. When you do a buyout, which is when you're moving your mortgage from one bank to another, you will be faced with some fees. The first fee you have to consider is your early settlement fee. Your current bank will charge you 10,000 dirhams or 1%, whichever's less, for exiting the mortgage agreement early. Once you do that, you will then have to pay a valuation fee with the new bank. Depending if you do a salary transfer with your new mortgage, processing fees may be applicable. But if you do the salary transfer, we can get those waived for you. You will have to pay new trustee fees. This is going to be the deregistration, re-registration, and administration fees to the DLD trustee office. All in all, an average buyout can cost you anywhere in the region of 10 to 15,000 dirhams.
Okay, thank you. So the next one is for refinance, will I get amount in cash regardless if I want to buy property or anything else? So I'll answer this question in short. Refinance to get cash in account, there is some limitation that the banks can give. Let's say you don't have an end use where you don't want to invest this money in purchasing a new property. In that situation, bank will give you a condition that you cannot take more than 20% of the property value as cash in hand. If you're okay with that, then yes, we can refinance to give cash in hand. But let's say if you're not okay with that, you need more than 20%. In that situation, you have to be a self-employed and it will go to that particular product, which I mentioned to you, which is specifically for business purposes. Here, yes, you can avail more than 20% cash in hand.
Lovely.
And meanwhile, I would suggest you guys to scan the QR code to get more information from our website. If you want to reach out to us in any way, just go to the website QR code.
Lovely. Okay, so let's have a look here. We've got another question around self-employed in the UK, looking to purchase a property in Dubai with a mortgage. the main source of income is from rent from a current property portfolio here over there in the UK. We obviously they want to look at the eligibility criteria and what income is required, how many months bank statement is required, and how many years of tax returns are required, and what are the salary requirements. I love how you have definitely done your homework and it sounds like you are ready to make the move. So we will definitely be reaching out to you. But Abhishek, why don't you let them know a little bit more about self-employed as non-res?
So even if you're self-employed, what the bank does is that here there are certain specific banks. What they do, they will just look at your average balance that you maintain in your personal bank account in UK. For example, let's say I'm in UK, I have a business here, and I want to apply for a mortgage in Dubai. So here, what I can give as an option to the banks to determine my average balance which is kept in the account. I can provide my bank statement, which is one single bank, let's say bank A. But let's say I'm not eligible based on the income, which is the balance which is kept in bank A. Then I can also consider from bank B. Not necessary that the entire money has to be in one single account. And the beauty of this is that it's not necessary that the entire money has to be in the same country. Let's say I'm in UK, but I have some business in Dubai. I have a personal bank account in Dubai. I can consider the income even in that. So here there are multiple options with which we can help you out. What I would recommend is that you can scan the QR code, reach out to us. One of the advisor will reach out to you to explain the details of this case because we need to get some income information, which is this is not the right forum to discuss your income.
Amazing. Thank you
Oh,
so
I see. Constantia, how are you? We spoke few months back. So, yeah, I know you're working with a lot of non-resident customers. You're trying to bring them to UAE. Yeah, same question, same answer which I gave earlier. For non-resident customers, it's very simple. There are three things. One, provide us a proof of income. It can be salary or business, and give us bank statements which is under the customer's name, which has an average balance of 25,000 dirhams. If you're maintaining this much balance and you can determine the proof of income, yes, reach out to us. We will guide you how to take this forward.
amazing. Thank you so much for that question there. I can see there's a question here, and I'm just going to answer this for you very quickly. How about if we have a property in India and live here? Can we also get a mortgage? Unfortunately, we won't be able to leverage your property in India, but we may be able to assist you with taking a new mortgage as a resident here. So if you're self-employed or employed, we can look at the financing options available to you. Okay. Amazing. Can see somebody here, Marwa, has asked for us to explain a little bit more about the UK property part. Is this only for properties in the UK? As I mentioned before, we have a product specifically crafted and created for expats who live here in Dubai, work here in the UAE, and have properties in the UK. We are able to leverage your profile here to release equity from the UK. We're looking at competitive rates similar to the ones that the market is currently offering in the UK, below 5%, there or thereabouts. What we'll do is we'll conduct a valuation of your property in the UK, which is handled by the team on the ground in the UK. Once the figures have been confirmed, they will talk you through how much and when you'll be able to release the equity from the property. Essentially, they're doing a buyout from your current bank to the new bank, but based in the UK. Once everything has been settled and the equity has been released, you will be provided with a digital account, which will enable you to use the account both in the UK and also here in the UAE, fully accessible online. It is capped at the loan to values of, I believe, around 60 to 70%, maybe 80% in some cases. We need to take an assessment on this and assess your profile here, but we can go into detail. So be sure to scan the link and we can get in touch and discuss further. Okay. Let's see.
So
What have you got on your side, Abhishek?
yeah, so this is from Mohammed. Can I go again fixed rate after I'm completing 3 or 4 years first fixed rate period. Yeah, so basically you're trying to ask, once you finish your fixed tenure for the mortgage, can you go back to the fixed rate? Yes, this can be done, but this is not done in the same bank. So let's say you have a current existing mortgage, which is with bank A, example, and your fixed rate tenure is getting over this month. So what we suggest is that you reach out to us. We will explain you and give you options for the latest updated interest rates for different bank, and we'll explain you the terms and conditions involved, the cost involved when you move from one bank to another bank, and then you can make an informed decision whether the payments, after making the payments and the cost, is it a viable decision to move the bank. If yes, then definitely we can do that. But to answer your question, we cannot do it in the same bank. It has to be moved to a different bank.
Perfect. That's a very good explanation there.
Abdul,
Okay.
how can I request a quick callback? Abdul, you can reach out to us at 800 Pripco, message us the details, or you scan the QR code, reach out to us. One of the team member will speak with you to answer your queries if you have any.
Okay. I can see we've got a question here. Can I take a mortgage on joint ownership with my father? I'm an Indian national, a UAE resident. We can put your father on the mortgage. Okay, there will be some limitations, but we can put him down as a co-applicant, and obviously apply for any liability in your name. Maximum age for a mortgage is 65 for employed and 70 years old for self-employed. So one thing we have to consider is, would the minimum term be affordable for you on a monthly basis? So when you scan the code and you get in touch with us, we'll be able to go through that in more detail and discuss how this will have implications on your monthly installment. And if that works for you, then we'll find a solution of how we can move forward.
Okay,
Okay.
just one more thing. Can I take mortgage with my father? I have a recent case in that the client, he was 86 years old and the property was 100% under his name. He wanted some funds to purchase something else. He reached out to us if I can get a mortgage, but because of the age limitation, we couldn't finance him under his name. But upon asking few questions, we got to know that his daughter is working in UAE, but she was not part of the property. This is just an FYI to everyone. It's not necessary that you have to be a part of the property to take mortgage. If you can prove your relationship with the owner of the property, specifically it has to be direct blood relatives or spouse. If yes, you don't have to be part of the property. It's just that you will be the main mortgage applicant and the property owner will be a co-applicant. There are two terms, which is co-applicant and co-borrower. Co-applicant is just a person's name which is on the mortgage application. They are not liable to make the mortgage monthly payments. A co-borrower is a person who is liable to make the monthly payment. So in this situation, since the person's age was 186, sorry, 186, a person's age was 86, he was not liable to pay monthly payment. That's why we made him a co-applicant and his daughter was the main applicant. So that's how we were able to mortgage them.
So, solution driven. That's our motto. I think we need to create that new motto. There's always a solution, and we will do our best to make sure we find a solution viable for you. We can see that we've got some more questions on here. Let's get through the last few. And
Just a reminder, thank you, Abhi. So for buyout, do I have to make again DLD registration fee for the new bank? No, DLD registration fee is paid only when you purchase the property or you transfer the ownership. But when you change your mortgage from one bank to another bank, you do not pay DLD registration fee. The main fee which involves in moving your mortgage is the early settlement fee, which is charged by your existing bank. As per central bank guidelines, the fee cannot be more than 10,000 dirhams or 1%, whichever is lower. This is what the bank will charge you. And if you reach out to us, we can tell you there are some banks who is ready to give you a cashback for the fee that you pay to the bank to exit. So let's say you have a current mortgage with a bank, which is charging you a little bit higher interest rate. in that situation, what we can do is that we can give you an offer with another bank. This bank covers the cost that you are paying to the current bank to exit from it. So there are some lucrative offers going on right now. So if you are someone who's looking to apply for a new mortgage, I would suggest you to reach out to us. We can give you the better terms.
Amazing, thank you. We've got a question here. Does he have to be a resident for the off-plan mortgage and no off-plan finance for non-residents? So we actually are able to offer finance for off-plan mortgages. As long as the build is 50% complete, at least 50% has been paid, we can look at financing options. This has recently also opened up for non-residents. So yes, if you are a non-resident, you may be able to avail some off-plan finance. Same caveats apply, 50% paid, 50% complete from the developer. Subject to your affordability and your profile, this finance option is definitely now available.
And just to add on this, it's applicable only for selected developers. So
Of
if you want
course.
to know if the property that you have is eligible under off-plan financing, reach out to us. We can give you better information.
Perfect. Thank you so much. Can we get equity if previous apartment is on developer payment plan and remaining payment is 20%? Abhishek, I think you dealt with a case like this fairly similar. They wanted to release some equity from a property with a developer under a payment plan. It's all about refinancing off plan, is that right?
Sorry, I was typing on another question. Okay. Can we get equity if previous apartment is on developer payment plan? Okay. Equity option can be given only if there is a title deed. If you have a title deed, that means the payment is 100% completed. So to answer your question, no, it's not possible to take any equity out from a unit. It cannot be done unless and until you have not cleared the entire payment. So equity is possible only for a fully paid unit.
Perfect. May I know what the procedure is for international clients who are planning to buy a property in Dubai? How much loan can they get from UAE banks? So, if you are an international client, you are classified as a non-resident, and that will be the type of mortgage you would be eligible for, a non-residential mortgage. So, if you are planning to buy a property in Dubai, you can get up to 60% of the market value. So, whatever you sign on your agreement, you will get 60% maximum from the banks as a mortgage. Whether you're employed or self-employed, no matter where you are, there are some sanctioned countries, of course. Again, we can discuss those. But on average, we are able to get non-residential mortgages at 60%. Okay. What have we got here? Let's see. Also, if I've got a rental property income here in the UK, does it count as salary? So if your profile is purely rental income, you would be classified as self-employed. So you will need to run your figures through the tax man. You will have to get some tax returns in hand to show that you're self-employed and you're receiving rental income. Just rental income on its own may not be sufficient for UAE banks to give you lending.
I'll take this one from Arif. How long before non-residents should start the process to take mortgage to complete? Uh, what I would suggest is that the easiest and the most stress without any stress process would be at least 2 to 3 months, because there are some checks which are being done by the bank before they can give an onboarding approval, which is called as compliance approval. This compliance approval, sometimes it takes time. There are some cases which can be done within 30 days, some cases which can be done within 15 days also, but it all depends on the compliance approval. So since we do not know the specific timeline for that, if you have time to take a decision, I would recommend at least 3 months before you start the process, so that we don't have to push for things in the very end.
Perfect. Okay, so let's have a look. Do you have to pay DLD for a transfer from personal ownership to a company you own? And what is a HIBA transfer? Abhishek, this one sounds like it's got your name written all over it.
Yes. Do you have to pay DLD for a transfer from personal ownership to a company you own, and what is Hiba transfer? Hmm.
I
This is
believe.
something new. Honestly, I need to check what is this. Do you have to pay DLD? This is more towards a real estate transaction. I don't see where the mortgage is here.
Mhm.
Yeah, give us some time. I'll do one thing. We have our internal real estate team who supports for the mortgage transaction whenever we go do the registration. We'll speak with them and we'll reply to your question.
Perfect. Abdul asks, if a client wants to buy a property and he doesn't have an account here, then how will he pay from India as so much charges to transfer from India to the UAE? Can he open an account before buying the property here if he doesn't stay in Dubai? Most banks, when taking a mortgage, will request that you open a bank facility because, of course, you will need to make monthly installments. Now, if you have a tenant in the property, they are likely to be paying you rent, and that rent will be paid in dirhams. If it is paid in dirhams, it will go into the account held in your name. So, therefore, that should mitigate any international transfers that you may need to make on a regular basis to pay your mortgage. As part of the compliance for the mortgage application, banks will do their verification checks to open up that current account. So it will be part of the application process, and it is important that we can open the account, or else the mortgage may not go as seamlessly as you may think, and you may not be able to get the mortgage facility at all. But again, our dedicated advisors and the bank advisors will be able to assist you with this one.
Okay, I'll answer this question for Vishal. Procedure to get loan staying in India to buy properties in Dubai. I explained earlier, it still remains the same. You show the proof of income and show average balance of 25,000 dirhams worth of money, which is kept in your personal account. If yes, we can do the mortgage. What I would suggest you, Vishal, is that you scan the QR code, reach out to us, and we'll give you the details and documentations required to underwrite the case.
Amazing. Guys, listen, thank you so much for tuning in with us this evening. We have answered as many questions as we can. We can see we have got questions that have gone unanswered. We will do our best to get back to you at the end of this webinar directly.
As we
So,
speak, just replying to everyone, so I'm sure you'll get some replies shortly.
yeah, you will. We'll go through this off the webinar. But once again, we'd like to thank you so much for taking the time to join Abhishek and I this evening to go through the 101 mortgage journey and how we can here at Pripco can help you. So that's it for us today. We really hope you have taken a lot from this, and thank you again for joining us.
Thank you, everyone.
Take
Bye-bye.
care. Bye.